Hello everyone and welcome to Macro Cafe episode 36. I am your host, the Cowboy. This is Elliot with Café. Let's get started. Alright, before we jump onto the charts, I want to show you a couple of places where you can find me. So first of all, you can find me up here on Twitter at Elliot Café. Go ahead and follow me up on there. You can also find me on Substack. I have a weekly newsletter. I'm going to try to post more information here and make this a little bit more active. It's called The Pigeon and the Statue. It is free. Go ahead and put your email and subscribe. You'll be notified every time I post something in there. But basically, the Strong Pigeon Report talks about the latest things that happen in the markets, and I'm trying to cover everything from the equities to different stocks and cryptos and sectors, industries, even outside United States, things that kind of look interesting. I'm looking at the price action and trying to make sense of what's likely to come in those markets. So I think you'll find it pretty interesting. It's about a 5 to 10 minute read, and you could get some decent information out of there. So go ahead and follow me up on there. And then lastly, this is my private trading room up at Telegram on Elliot Cafe _bot. You can put this link in your browser and it will take you straight to the bot, and then you can choose whatever subscription you want. But basically, there's also a 30-day free trial. You can come in, and you can cancel anytime. You can see what we do, see if you like it, if it fits your style, very active up in there every single morning. I put updates with Elliott Wave counts in multiple markets. Take a look at cryptos, Bitcoin updates, daily videos, things of that nature. So you might find it useful. And, if you don't, I'll be happy to have you anyway, just to kind of see what we're doing. All right, so let's jump and take a look at the slides I have prepared for you today. And basically, I want to take a quick look at kind of what happened. And then we'll jump over and take a look at the S&P 500. I got some charts for gold. We take a look at Bitcoin as well. I want to, run you a little bit through kind of what's going on with the dollar. I also have some charts for Tesla. So, all right, so let's take a look here. Basically, year to date, there was a pretty strong move in the month of January towards the sectors that were completely destroyed during the 2022 bear market. And you can see year to date, we have consumer cyclicals, more than 14% discretionary, right? There was a move into discretionary in technology, communication services. All of this have been a pretty good performance so far this year. Now, for the past couple of weeks in here, we've been starting to kind of pull back a little bit and just correct. The month of February, seasonally, it's not the best month in the market, especially the second half. So I continue to expect a little bit more drag into these markets, but I do think overall then into March and maybe even April, we're going to try to pull back to the upside and maybe correct back a little bit in May, and then, continue with the advance higher, because I think there is a decent chance that the lows have been put into these markets in October of the last year, at least with what the price action continues to kind of show us and kind of what's happening underneath the surface. Last week, energy put up a pretty good performance. I was up 4.8%, and then you can see in here, most of the defensive sectors were outperforming the markets overall. Healthcare, financial, utilities, consumer defensive. So these were the ones that kind of lost at least. While communication services, cyclical, some materials, they all kind of got taken down. I mean, Google had some bad moves. We had a bunch of earnings. So I think the market is just kind of trying to digest, this kind of earnings season and see how it wants to position going up into the second quarter. So, that's pretty much the picture. I still think there is an interest towards risk overall so far this year. So we'll see. The month of January usually tells us what's going to happen for the rest of the year, and if this is any indication, I think we could have a pretty positive year. Now, if we jump over and take a look quickly at the sectors, the only sector that was in green last week, again, just like I showed before, was the energy sector. You can see this is the weekly candle. So you have a nice, pretty bullish engulfing formation, which could tell us that probably, we might be getting some more bullish price action out of energy next week. I was expecting, at least I am expecting, the energy sector to continue to underperform this year, and to get more of a move towards communication, discretionary tech. But I don't want to dismiss the price action here. It shows us that, they might want to try to push it higher on XLE. Now you can see communications is the beginning of the year, right? Pretty awesome rally. This past week was bad. Discretionary in here as well. Just a nice rally to the month of January, and here into February we started to pull back. We pulled back last week, and this week was more of an inside candle, pretty much on the bearish side. So if I am to read this, I think that this upcoming week might be on the downside as well. So we'll take a look at that and see how it looks. Look at the technology sector as well, right? We've had 1, 2, 3, 4, 5, since December, about 6 weeks of bullish price action, and we're starting to lose a little bit of that momentum. Now, if you look at these other sectors, none of them look, stellar in any way. I mean, industrials are kind of flat. Maybe they'll try to break it higher. Materials, not much going on in there. Healthcare has been pulling back. Financials are, still doing okay. But there is not a lot of conviction. It's a lot of chop. Basically, S&P 500 has been in a big range since last year in June, May to June. If you look at those charts, it's just been kind of sideways with a lot of just up and down moves and without a lot of direction. So, we're trying to trade as much as possible. I mean, I'm very active in trading stocks, and my trading room up there puts alerts every single day. I take trades, and I can't overstay my welcome in none of those. I don't really trust the moves a whole lot, so I'm trying to kind of get in and out at the beginning of the day. I'm looking if I see any charts that have good momentum, I jump in, and I try to get out maybe the same day sometimes a couple of days later, depending on what I see. But I do not have a very strong conviction just yet, right? I want to see a little bit more from this S&P 500, that it's going to continue to break higher, break 4,300, so we can position a little bit better longer term. For now, it's still, I think, pretty much a trader's market. So let's take a look at the S&P 500 here. I mean, you can look at this kind of weekly time frame that takes us back to 2004, 2009 great financial crisis, and we're in a pretty good uptrend, right? A series of higher highs and higher lows. Here is the COVID crash. We've gone higher after that, and we pull back. I mean, this price action in here is very choppy, right? It's mostly indicative of some kind of a correction. There is not any strong impulse in here that can tell you, yes, you are in a 5-wave decline and, it's all bearish from here. They've tried to do that, but, we pulled back. I mean, there was some maximum bearish sentiment back in October. That's when we've had kind of the highest, I think, inflation readings. And then since then, we've been trying to come back. We're going to have an inflation report, I think Tuesday or Wednesday of next week. So that's going to be the next kind of catalyst for the markets. But this middle trend line in here continues to hold, which is I think probably a good indication that this market, could continue higher. They really don't want to break below this. We don't have a full 5-wave advance just yet. It's just, just what it looks so far to be just a simple 3-wave move. We did break the trend line from those that connects those highs. The PPO in here, which is the percentage version of MACD, it's pushing up into the positive territory. You can look at the RSI that's, passed above 50. Previous rallies were not able to break, just a little bit, were able to break the 50 line, but then quickly pulled back. And this is the first time that we seem to have a little bit more of a sustained move into the RSI, above those levels. So, I'm taking that as a positive sign. But it is a bull market. It's got, a couple of, kind of corrections along the way. And this could just be just a very simple, just a cyclical bear in here that, is looking to, for the bull market to continue up higher. Right. Let's take a look, a little bit of the shorter time frame. And, this is basically, just looking at, again, just on a 1-week chart, putting up some wave counts. And, if we're on the bullish side of things, then I'm looking at this as a 1-2. and then at the primary degree, then followed by an intermediate wave 1 with an intermediate wave 2 finished in October 2022 at 34.91. And since then, we've gone up in an impulse in a wave 1 followed by a wave 2, and we're beginning to build a larger third wave advance. You could see that the trend line in here has been cracked. We're starting to make, higher highs here, higher lows. So based on this, there's a decent chance that this market can continue to the upside. For me, if you're starting to break below these levels, you're getting back below this kind of 3,800, 3,750, we could be in a larger trouble. And that will indicate that this was a three-wave move and you're probably getting ready to break to the upside. So it's very important that not only we stay above this trend line if we are to keep the bullish narrative, but also to stay above the swing low right there. Okay, that's the bottom of what we're thinking. It's a wave 2. If this is another wave 1 up, right, then you can't really have the market break below that level, because then you cannot have a 1-2-1-2 anymore. So definitely things will change if we're breaking below those levels. So for now, I do like this count. I gave this bear market, a lot of chances to develop to the downside, but we kept getting rejected. So, I kind of shifted back in, mid-January. By the 20th of January, I started to kind of think more towards the bullish side as I saw that the markets are starting to push, and not really give the bears, the indication that they needed to see, myself included, that they were going to break to the downside. So that's kind of where we are in terms of the longer term count on the bullish side. Here how it looks on the one-day chart. Again, I'm doing morning updates on these counts every single day, and I take a look at the internals back in here. I'm trying to identify kind of what the likelihood of certain things are happening, and it's a difficult count from this low to this high, to tell you the truth. It's still a lot of overlapping. It's not the cleanest impulsive move, but I will continue to stay with it until, again, some of these downside levels are getting broken back. One level that I'm watching here, it's basically if this is I'm measuring from this low to this high, and then I'm putting up a fib of this rally, and that comes in at about 39.23. So it's important that if it's a bullish move, that we don't come below that level. That would be the 61.8 of this, and anytime you move below that for a 1-2, it starts to be problematic, because you want this second wave of a lower degree to be a little bit smaller than this one, and the 618 kind of gives you a pretty good idea, if you're kind of right or wrong about that. So you can see that, we broke above that 4100. We came back on Friday. They tried to push the market a little bit higher. This is so far just a small three-wave move. I think this is corrective. Again, I'll update the chart on Monday morning in the room. But if we're starting to kind of squeeze back to the upside, it's very likely that this larger third wave can continue. And the targets for at least, for this impulse are back towards 44.21. So we got to overtake this B wave high and move to an equality between this wave 1 and this, impulse in a third wave. Ideally, this is going to move up towards 161.8. But by the time you move into that fib multiple, you will be above the 48.20 zone. All right, so you'll be a 1-2. Third wave will be kind of somewhere up there. Then you get a 4 and a 5. So, it's slowly beginning to build up in an impulse. But we need to see a little bit more. Now, again, if we're breaking below 37.64, so first of all, if you're breaking below 39.20, I think things are going to start to look uglier, and then below 37.64, then it's very likely that you're going to start to break towards 3200, and below these levels I will start to reinitiate the bearish counts, and I will put those at the forefront once again. So for now, we'll stay with the bullish side. All right, let's take a look at what's happening in the dollar and just a quick look at the euro. We've been monitoring these lows in euros since, 97, 95, as the markets were declining in here. I posted up these longer term charts into the pro room, and, we've had an awesome rally in here in the euro and lower in the dollar, right? The dollar had a pretty strong move for 2022, actually since 2021. Then it topped in, I think it was in September 28, 2022, with the magazine covers, and everybody was super crazy about the bullishness in the dollar. So we established those tops in the dollar, the lows in the euro. We've climbed here pretty aggressively towards almost 110. And I think, we're about to probably enter a little bit of a period of dollar strength. That's why the markets are acting a little bit weaker too. And I think we're probably going to get like an ABC back in here. Again, just the level I'm watching in the euro, it is this 101.07. That's the 61.8 pullback of retracement of this entire rally. If we're getting below that, we can start to have problems and think that, there could be more downside coming in the euro and higher in the dollar. I don't think that's the case. I think the dollar put in a pretty major top and it's just going to go through a little bit of a corrective phase right now. Longer term, I'm looking for this count. I mean, you can see it's a pretty complex count. Looks at it as an A, then a triangle in a wave B. Sharp drop in a C wave for a W, then you connect here in a wave X, and then you do another ABC. So this whole entire move, it's looked at it as a B wave followed by, next large rally in the euro and lower in the dollar, structurally kind of. So, but for right now, I want to see a three-wave setback, and then if we're getting back, then I will know with more conviction that there's some trend lines here that we got to break, and so there's a lot of work to be done in the euro and in the dollar to kind of see where the market is going to go. But I think the dollar has hit a pretty important top. So here is the count. We dropped lower in 5 waves. The top, I think, was near 115. Wave 1, flat in 2, 1, 2, 3, 4, ending diagonal in a wave 5 of 3. Then, quick push up here in a 4th wave, again in a flat, near 105.5, and then you push lower in a wave 5. I mean, we've been kind of all over these lows, and I've been cautioning my members too. I said, be careful because, we're about to end a period of dollar weakness in here, and just kind of start to think the other way. Based on that, we opened shorts in the dollar, and we've had other few trades that were related to this upcoming strength in the dollar as well. So I think we're correcting now, right? It's probably, we might already have an impulse finished. So looking for the wave A, wave B, maybe a little bit of weakness coming in the dollar, and then a wave C higher. And that's going to be either wave 2, followed by a larger decline in a wave 3, or a wave B followed by a wave C. We'll see which one it is. But I think overall the dollar will correct higher in here, going towards, again, maybe this 4th wave, or maybe a bit higher. We would look at the 61.8 retracement of this decline, wherever that comes in, maybe 107, 108, and then the next leg lower. So for right now, here is some of the resistance levels. 104, it's 1. This is obviously a big support. I mean, if you pull the longer term chart of the US dollar, you'll see how massive this 101.50 between 100 and 101 it is on the longer term charts, followed by a couple of swings up here near 104. So that's kind of what we're watching, and the dollar can create a lot of issues for the markets if it's getting too much strength, right? Then a lot of these risk assets are going to pull back. And not only that, but if you take a look at yields, it's a similar story happening there as well. With the rise in yields, you're getting a stronger dollar, and you're getting a little bit of a move towards, the riskiest sectors to the safest sectors. And, last week was a pretty good week for the 10-year yields. We've gone 374, I think was the high, but I still think that we're in some kind of a consolidation pattern here before you move higher once again. So, for me to start to kind of change, into thinking that lower yields are coming, some of these, pullbacks, have to kind of overtake some of these fib levels for the downside. So for example, 38% is what we're watching for the 4th wave. The 10-year yield comes at about 311. If you're getting below that, you're starting to think that might not likely be a fourth wave, might likely that this could be a completed move and you're actually into a lower yield environment for a while. So that's how I'm looking for clues. It's all about looking for clues in these markets and fibs and levels that guide you, to where you're going to get basically confirmations of certain things happening. I hope I'm clear on that. But another one, it's 253, right? If you're starting to drop below this level, then it's likely you're not going to be. Plus, this fourth wave is going to get way too big. I mean, look at the size of this wave too. 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 3, 4, and 5. So, could you move this fourth wave back here? You could, but I think it's still, just a pretty short move. It would be quite surprising if this is all we're going to get in a fourth wave, followed by straight a move up higher here in 5. So I think there'll be some time still. So maybe that's a triangle. It's an A, B, C, D, and E, maybe for the rest of the year, or maybe halfway through. We'll continue to kind of watch it. But, this type of a move, if you're moving sideways and you're not too aggressive, it's still beneficial for risk assets, right? The problem is when this starts to move from 370 to 4 to 425, right? That's too much of, of an aggressive climb in the yields. Right, let's take a look at gold, because gold has been pulling back as well. So, with the dollar weakness, we've had a nice rally in the gold markets. With the dollar strength, we're getting a sell-off in gold. I have a couple of counts in gold. I think I've showed in an update last week the bearish count in gold, where this looks at it as a wave 1 or as a wave A. Then you have an ABC for a flat, followed by, the next decline lower in gold. Based on kind of what I'm seeing in the dollar, if there is a major top up there and we're looking for a period of weakness, then gold should benefit. So I guess this count makes a bit more sense. But, either way, at shorter term, they're kind of following along, both counts, right? Because they're both looking for a move lower. So if it's a bearish move, if this is an ABC of a flat, then you're looking for an impulsive move down. So that would be a wave 1, a wave 2, a wave 3, 4, and 5, right? If it is a bullish count, you're following the same thing. You're still going to get an A wave, right? And you're going to get a B wave, and then you're going to get a C. So under both scenarios, up until somewhere here, you're still, the counts are going to be very similar. So either it's going to be a wave 1 of a decline or wave A of an ABC. So for right now, I think we have, or we're building a 5-wave move. I'm showing my members here on the smaller time frames that it looks like, there's a 5-wave move that's already completed. So I don't know if that's all of A or just wave 1 of A. We'll see. But I'm pretty positive that this will take us into, beginning of summer. By the way, this whole thing here is complete. Again, is it as a larger impulse or as a correction? I think this is starting in some kind of, time-wise, right, into some kind of gold weakness, I should say, right? So an ABC, again, just we'll be watching these levels as the fibs kind of come back towards 1779, 1739. In this correction. So that's kind of my view on the gold market. And then once that's done, then you can start to, if it's a correction, right, then we'll begin a larger third wave advance. If you're breaking below the 61.8, then I think you're probably going to continue to the downside. All right, so that's my view on gold. Now, a couple of charts on Tesla. We've been watching this, very sharp move in Tesla. I was thinking that they're still going to build a 4th wave and a 5th wave lower, maybe go towards below 100, maybe towards 90. It never really came that move, and Tesla really had an awesome rally out of here, right? So it doubled from 100 to 200, 215, whatever it was the high. But if you look at the weekly time frames, right, we're coming back and retesting some of these levels that it broke down from. And this last week has a pretty good shooting star from 215, and to me, that's a bearish sign. Now, so we don't know exactly what's going to happen, because it all depends on kind of what this is, right? I have a bearish count, I have a bullish count, but all I know that shorter term, at least until probably about April, we're probably going to be starting to correct in Tesla in here. So I do have a pretty high degree of confidence that we're probably going to get some kind of a pullback, and I think that's what matters for trading purposes, right? I mean, what happens longer term, it's a crapshoot at the moment, but near term, I think there's a decent chance that they could pull it back here again. It could be a wave one of a larger decline, or it could be just an A, B, and down in C. And here is the count. So under the bullish scenario, we're looking for this as being a fourth wave. So A, B, C, D, triangle B to 313. And then a sharp decline in a wave C. Now, this was not, the most ideal, let's say, 5-wave decline, because I think, and markets are never perfect like that to give you exactly a fourth wave and then another fifth, because that's kind of what we were waiting for. But, you could see that there is a pretty good move in here. So you can look at the 1, 2, 3, 4, and 5, right? That's the best that you can kind of count this 5-wave decline up into 38.2%. So just a, let's say an awesome zone for the fourth wave pullback. And then you've had a rally. I was expecting the top of this market to come in the week of February 13, which is next week. Well, I think it came sooner than that, right? So I think the top was Thursday, and before we started to pull back, if I'd be surprised if they push it back next week one more time. But this is what I'm watching. Back to, middle of April or something like that, this correction to start to happen. And I will probably be shorting Tesla versus call credit spreads, maybe even short stocks, stuff like that, I will try to take advantage of this decline. And then we'll go from there, depending on kind of how this looks. Anything below 135 in Tesla will start to be problematic. So you do want these levels to hold. And from there on to see a nice 3-wave setback, ideally, and then a continuation back to the upside. Let me just get a sip of coffee, guys. All right, I'm sorry about that. Look, let's keep going. The next chart I will have for you here, it's Bitcoin. So this is a daily time frame on a log scale, and I'm still clinging to this count. Again, it's not my favorite anymore, because you're seeing the size of it is so large compared with this wave 2. We are pulling back, so I do have to consider it still. It's just, here's what I'm looking for in here to kind of give this count, the benefit it deserves if it's going to happen. I'm looking for a move back towards below 19,000 in Bitcoin. If that happens, and if you're starting to break below the 61.8 in here, first of all, I don't think that's going to be a fourth wave anymore. And, that's going to be the first clue that you might have a flat correction completed and you're looking lower, right? And that's at wave A, and down in B, and then in a 1, 2, 3, maybe a smaller fourth already happening here, and a wave 5. And, we're misjudging this fourth wave, and that's already a completed impulse, and then you're looking lower. So very important that if you break below 19,000 in Bitcoin, I think you're going lower. Okay, and then you can start to assign a wave 4 flat up into these levels. Up until that happens, I think that staying with the bullish narrative here still makes sense. And that is this count back here, right? Where you have a 5-wave completion, the end of the bear market. And then you're beginning the next larger advance in Bitcoin, and you're going in a wave 1, wave 2, then you have a 1, 2, 3, 4. This pattern here is kind of awkward. There's a lot of variations back in here, so I don't know if this is the best one or not, but we'll go with it. It's kind of the best I've got, where you're going down in a flat in 3 waves, then you go up in 3, and then you're building basically a larger flat. So A, B, and then down in some kind of a C wave that still might have a couple of legs lower to finish off, maybe back towards this trend line. back towards this 38.2% at 20,621. But I did talk to my members. I said, listen, if you're breaking below 22.5, it's likely you're going to go to 21.5. I think that was hit. And you're in the territory of the previous fourth wave, which is the larger fourth wave is usually travels to. And then from there on out, you can get a bullish move. So this will depend on what happens next week in the equities too. And the second half of February, it's not ideal. So if we're continuing to kind of pull back, Bitcoin will I think underperform as well. But it's it's still in a clean channel. I do like the 1-3-2-4 line for now. And again, if you're starting to pull back below this 20,370 and start to crack this channel, I think that we might have to secure already a 5-wave move completion. Now, that does a couple of things. First of all, like I said, it could be that fourth wave, or it could be already a wave 1 completion up in there, and you're actually looking for a second wave now. Okay, so it's all going to depend kind of how this moves, and then we'll do some fib counts and see how everything kind of takes shape. But again, for me, break back below 19,000, I think it's kind of problematic for for cryptos and for Bitcoin as well, right? That's this massive level right here. We do want to stay above those levels, even if this is a wave 1. Maybe the 61.8 pulls a little bit lower. Let's say that's going to end up being some kind of a 3-wave move in there like that. This will have to be kind of clean in some kind of a zigzag, come back from here and then push higher. So that would be a wave 1, wave 2. So I guess, chances to get back into long Bitcoins will probably be here towards 19,000, to kind of resume all my blabbering so far. But, that would be, I think, pretty good entries with some kind of clearer risk levels defined. There's no point in kind of chasing this out. And we talked about this talk about this every day into the daily videos I do with the members. So that's kind of where we are, guys. So thank you for watching. As always, don't forget to subscribe and like. Again, visit me on Twitter, visit me on Substack, come and take a 30-day trial into the program, see how you like it. Other than that, thank you for watching. I appreciate you all as always, and I'll see you on the next video. Thank you. Bye-bye.